Hello everyone, thanks for joining us this morning and welcome to this educational presentation of 2 must-have methods in action. Now, in order to be successful and consistent in today's markets, most traders have more than one method or a combination when using together a couple of good techniques or a couple of good indicators that can help them be consistent. The only trouble is most of these methods or tools or techniques are faulty in the fact that they're not very consistent. For example, let me show you this chart here in UI. This is the way most traders trade, in the fact that they'll use inconsistent methods to justify entering or exiting a trade. If we look at UI here, we see in the beginning the stock is actually going up. So the trader will say to themselves, well, I've always studied and learned about trading with the trend, and we're making higher highs and higher lows. As you can see here, the highs are higher and the lows are higher. So this means we're in an uptrend. So at this point, traders are looking at this positively until we get to this point right here, where you say to yourself, well, there's resistance. I took that $10,000 class about the institutions, and they say that there's a lot of selling going on here with the big banks and the big companies. And so most likely we have a lot of resistance here. So I don't want to get involved in this stock because there's a lot of selling pressure. And on top of that, look at the direction now. Now we're making lower highs and lower lows. You remember you studied trend, and these highs now are actually lower than the previous highs, and the lows are lower. So this determines that we're in a downtrend. And then lastly, you took that course about candlesticks, another technique that you follow. And what do we have here? We have a bearish engulfing pattern, which is a very bearish sign. And then we have another one. Another one is followed here. So there's a lot of negative signs here. So at this point, you say to yourself, I just want an opportunity to get short here because the trend is obviously going down. So I want to wait for a little bounce, just an opportunity to get in, and lo and behold, the very next bar is up. So here's your chance to go short. You either buy the puts or maybe you actually short the stock, and that's where you sell, and then this happens, right? This is mostly what happens to most traders, and this is why it's been estimated 80 to 85% of all traders fail. Not because you don't have enough experience or enough knowledge, it's that you're following faulty things. There's no consistency in the methods that you are applying. Well, in today's presentation, I'm going to share with you 2 methods in action that have a very high level of consistency. In fact, these 2 methods, when combined, would have actually generated not a sell signal, but a buy signal 2 days in advance of that 50-point rise. So you're going to learn how to do this, and actually you're going to see how simple it is how to apply this on our platform. The process I'm going to share with you is the PTS Primo charting platform that actually applies these 2 methods, and this is the platform that actually teaches you how to trade with these 2 very consistent methods. So this is going to be a very strongly educational presentation today. Thanks for taking time out of your Saturday, and welcome once again. My name is Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we're a little bit different from other educational courses or classes you may have gone to in the past, in the fact that we don't promise to have techniques or strategies or methods that never lose. We don't have any type of chat rooms or signal service that tell you what to buy or what to sell. Now, we are first and foremost an educational company. You see, it's our philosophy, our belief that the reason why most traders fail is because you take yourself out of the game. You rely on someone or something else to make your trading decisions for you. Now, this could be an inconsistent method. It could be some guy in a chat room. It could be someone on TV. But either way, you're taking yourself out of the game. And this would be similar to an airline pilot letting someone else fly the plane for him. You wouldn't want to be on that plane, excuse me, but unfortunately, most traders trade this way. They're always asking someone, what do you think? What do you think of this market? What do you think of this stock? All right, what do you think I should do? And so you take yourself out of the game. Now, how do you put yourself back in? By being provided with sound fundamental education that stood the test of time, and then allowing you to make your own decisions, not having someone tell you what to buy or what to sell, what's the perfect market, the perfect time frame, where to get in, where to get out. Having someone provide you with different variables so that you can make your decision on how you want to trade this. Now, the reason why I know this is because I've been trading for 42 years, going on 43 in the next month or so. And when I first started out, I traded probably like most of you today. And guess what? My first 2 years, I couldn't make a dime. My mentors, who were traders on the floor of the stock exchange, and I was on the floor as well, they taught me these same things that I teach to my students around the world in over 115 countries and in virtually every state. So this is what I teach to my students, the same things that were taught to me, and hopefully they'll be able to sustain you for going on 43 years now. Now, before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two methods, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, if you're new to my webinars, once again, I'd like to take this time to invite each and every one of you to follow us on Twitter. Here's our handle right there. I would suggest copying that down. It's abbreviation for Specialist Trading. I post different educational information on a daily basis, anywhere from current signals that have been generated by our strategies to little bits of financial wisdom. So there's a lot of great free educational information. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. That's our only sole purpose. That's our only goal. We're not going to tell you what stock or what market you should be trading. We're not going to tell you what time frame. We're not going to tell you where to get in, where to get out. That's up to you to decide. The good news is we provide you with all of these different variables. And our courses have upwards of different 7 ways to get in, 7 ways to exit, 7 ways to place your stop. And then we work with you to find out which one makes you feel the most comfortable. In my 42 years of trading, this is the only way one becomes consistent. You don't become consistent by going to a chat room and seeing what the head guy is trading. You don't become consistent by waiting for earnings to come out. You don't become consistent by going to a signal service and then they automatically tell you what to buy or sell. You become consistent by making your own decisions. So, as you can see here, my goal is not to force feed you signals and not to tell you how to trade. My goal is simply to teach you how to trade with a specialist edge. This is the same edge that was taught to me some 43 years ago and has sustained me for 43 years, and hopefully it will be able to do the same for you. Now, I'm going to share a lot of examples with you today with these two different methods, but please remember that, if I go through a slide and it doesn't really make sense, you don't understand something, please wait till the end to ask questions. If we stop for every slide, I think I have 150 slides here today. If we stop for every slide, we'll be here far too long. I don't want to take all of your Saturday up. So please wait till the end to ask questions, okay? I promise I'll get to each and every one of them. And please remember also, if you have to leave early or if you're having technical issues, if you can't see or hear me speak, don't worry. We will send each and every one of you a link to this recording, okay? All right, with that said, remember, keep the questions till the end and let's begin today's presentation. All right, so here's what my mentors taught me. These are the two must methods that you must have in action. These are highly consistent, and these make up probably one of our most successful and I would say popular packages we have at Specialist Trading and Pro Trader Strategies. But firstly, in order to trade consistently, you must have a method that is consistent, that is a consistent trading plan that's based off market behavior. All right, think what your trading plan currently is based off of. Is it based off the earnings? Is it based off what some guy's telling you in a chat room? Is it based off some convoluted tool or indicator or method that you have no idea how to explain it? Remember, we want to base it off of what we're trading. That's the market or the chart in front of us, because in all actuality, that's the source, right? That's what we're trading. So why shouldn't the plan, the method be based off that? All right. So let me tell you about one of our most consistent methods. It's strategy number 4. This is the first method my mentors taught me some 40 years ago, and I continue to use it in my own personal trading on a daily basis. Now, let's talk about some of the highlights. It's for all traders, so you don't have to worry if you've been trading 20 years or 20 minutes. It makes absolutely no difference, because in our course, everyone gets the same basic model. Everyone gets the same basic format. Then we work out from there with all the different variables to help format it and to fit it to meet your needs. Now, it was originally designed for traders looking to catch quick momentum moves. For example, when I first started trading it, I was in and out of a trade in like 5 minutes. But we've devised ways to stay in this trade weeks, months, even years if you like. Now, if a plan had an intensity level and 1 was the most intense of all methods that you couldn't even leave your computer, and 3 was the most relaxed, it's a very moderate number 2 intensity level. It only uses 1 indicator. That's how simple this process is. It only has about 4 or 5 rules, and it only uses 1 indicator. I'm going to share with you what that indicator is. It's the 50-period moving average, okay? That's the only indicator you will be using in this strategy. And someone will say, well, what is it based off of that? It's a pattern recognition strategy. Now, I can't divulge what that pattern is. I can give you two rules. And the first rule is buy signals will only be generated above the 50-period moving average. Sell signals will only be generated, conversely, below the 50-period moving average. Okay, that's the first rule. The second rule is you want to look for a bar that closes in that high portion of its range, like the top 25% if it's a buy setup. If it's a sell setup, it must be below the 50, and you want to see that it closes in the lower portion of its range. Okay? These are the first two rules of this strategy. Now, you can apply this to any time frame, any direction, or any market. So the majority of slides you'll see here today are on daily bars, but trust me, I use this on 5-minute bars myself. Okay? I use it on the E-mini futures. You can use it on any time frame, any direction, any market. So don't get caught up in thinking that this only works for stocks. Now, if you're a member of this course, hopefully you'll become members of this course, and you'll get all the rules and all the entries and all the exits. You'll receive automatic buy and sell arrows. Now, I don't want you to think that we go against our philosophy and say, well, wait a minute, Steve, I thought you're not trying to make this an automatic thing. I thought you're trying to teach us how to trade. Yes, we use these automatic buy and sell arrows as an educational tool. In other words, in the course, you learn what to look for. You learn how to spot this pattern that repeats over and over again. But I can't be there with you 24/7 with all of our thousands of students around the world to be there and tell you that, yes, you properly identified it. So we generated these automatic buy and sell arrows as a means for you to check your work. So in other words, we want you to look at a chart. We want you to get to the point where you can properly identify a buy or sell signal, and then click on the buy or sell arrows to check your work to see if you're right in validating a proper setup. Now, our edge with all of our methods, most especially strategy number 4, is consistency. Most traders define consistency incorrectly. In other words, they think a consistent method means that it never loses or it wins like 95% of the time. That's not what consistency means. Consistency means a 2-step forward, 1-step back approach. The 2-step forward meaning that you'll have some winners, the 1-step back meaning that you are aware that you will have losers. This is perfectly okay. There's nothing wrong with a losing trade. What's wrong is when you don't have a consistent method that's able to recoup that trade, recoup that loss. For example, how many of you have purchased a strategy or a technique, and the minute you start trading it, it just goes into a series of losses, right? And you start to think to yourself, man, I've had like 5 or 6 losses in a row. This is really getting serious now. That's not a consistent method. A consistent method will have, 1 or 2 losses and then have a winner that recoups those losses and then goes into a couple of wins, has 1 more loss, recoups the loss, and goes back, a kind of a stair-step approach. That's what our methods do. We are very aware that we will have losses, but we want to have a 2-step forward, 1-step back approach. Okay, so you have to have a consistent trading plan. Now remember, we said a consistent trading plan means that you are aware that you will have losses. Now we want to take it up a notch and say, is there any way, not to guarantee that we get rid of all the losses, but maybe we can filter out some of those losses so we'll increase our odds for success even more. Well, this is our second part in our must-have methods. This is a filter or a way to weed out some of those losses, okay? A tool that filters out bad trades from the good ones. And the best technique and the best method I know for doing that is something I've talked about before in the past, and that is the PET-D. The PET-D is another tool I was introduced to some 40 years ago back on the floor of the exchange when I was working on the trading floor. And it's a color bar algorithm. And this is the way it defines the trend, okay? And it'll also confirm if your signal is valid or not. For example, most traders would look at this and say, yes, we are fully in an uptrend, and they'll maybe buy on this little pullback right here, and then this happens, right? What if you could have found out way in advance that you were in an uptrend, say back here, and then found way in advance that you were in a downtrend? Well, there's a way to do that. You apply the PET-D. Click on the PET-D on our platform, and it automatically changes the colors. So you knew well in advance when you had a series of green bars that we were going higher, and you knew well in advance when you had a series of red bars that you were going lower. As you can see, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know, you can confirm if your strategy is in sync with that direction. So when you confirm the strategy signal, then you can see whether it's a valid trade to take, or whether you should filter it out and not take that trade. This is the beauty of the PET D. When you combine these two methods that are both highly consistent, this combination is called the dynamic duo. And I'm proud to say that the dynamic duo is our most successful trading package in terms of having broad appeal and its popularity among our students around the world. We have students trading the dynamic duo, which is strategy 4, along with the PET D, in countries around the world and in any market. I mean, we have dynamic duo traders trading this on 10-minute charts of currency pairs. We have dynamic duo traders trading this on Bitcoin. We have it trading on stocks and on E-mini futures, as well as commodities as well. That's how popular, but how consistent this package is. All right, so let me share with you the process here. Someone looking at this would say, the way most traders trade, would say, well, Steve, we were going higher, and I took that, candlestick course, and this is a shooting star, a very negative or topping formation. It's a reversal pattern, and as you can see here, the trend is changing. We're going lower, and most likely we'll go much lower until I get another reversal pattern. So I don't like this stock, STNE, and I'm going to stay short or look to go short, or at least just stay away from it. Okay? Once again, the way most traders, myself included, used to make decisions based off faulty information and inconsistent information. But once you take my Strategy 4 course, here's what you would have seen. In this area right here, you would have said, you know what? I think this is setting up for the pattern for a strategy number 4 buy setup. Someone could say, how can you see that? There was a downtrend, confirmed by that shooting star. But remember, we don't follow inconsistent methods. We only listen to what the market's telling us. And the market's telling us, based off this pattern that we teach you in the course, that this is actually a buy signal. So the way to check your work, if this is a buy signal right here, is to click on strategy number 4. The drop-down menu appears, click on signal arrow, and see if you are correct. Once you do that, the platform actually teaches you whether you're in line in learning how to properly identify a setup, and you did. Now, that's only part 1 of the method. Remember, we want to confirm and weed out, because we're not sure if this trade is going to work or not. Strategy 4 has a high level of consistency, but can we increase our odds for consistency? Yes, we can, by adding the PET D. We can confirm if we should take this trade. So how does this work? Well, if this is confirmed by the PET D, then the PET D will color or outline this signal bar green. It doesn't care what the other bars are. All of these bars could be red. All we need to know is that this bar is outlined or colored green. So what we do is we click on the PET D on our platform, and it automatically changes the colors. As you can see, it is outlined green. So now, not only do we have a highly consistent pattern as identified with the strategy number 4 buy signal, but it's also been confirmed by the PET D. So these are the two methods in action. Now, once again, this is not a system, so you have the choice whether to take this or not, but this is a highly probable setup. Let's say you did buy STNE, either the options or actually bought the stock. Well, the stock went up 14 points in 2 weeks. Someone could say, well, how did you know that? How did you know it was going to go up 14 points? Remember, we don't predict anything. We don't tell you how high or how low something will go. We just know that the market was telling us it wanted to go higher. Now, remember, in our course, we give upwards of 6 or 7 different variables for exiting. Some traders may have said, well, you know what? I'll take a couple of points and get out. Some would say, well, no, I want to take at least 10 or 14. I want to stay in as long as possible. Is there a right and a wrong way to exit? Absolutely not. It's up to you. The wrong way is when you listen, once again, to someone or something else tell you where to get in, where to get out, where to buy, what the perfect market is. Remember, that goes against our philosophy. You have to get to the point where you determine your trading destiny. You determine what you're buying, what you're selling, where you're going to get in, where you're going to get out. This is the only way one becomes consistent. So we provide you with this information in our courses. Okay, so you know how the dynamic duo works. I'm sorry I can't give you the rules and all the, everything to this, because it wouldn't be fair to the students around the world who are students of the dynamic duo course. But I've given you 2 of the rules. Remember, if it's a buy signal, it will be above the 50-period moving average, and it will close in the top, I'd say top quarter of its range. If it's a sell signal, it will be automatically below the 50-period moving average, and it will close in the bottom 25% of its range. Those are 2 of the 5 rules of the course, okay? All right, so let's look at some examples here. Letter O, all right? A buy signal was generated. We want to confirm it by the pet D, so we add the pet D and we see that the bar is outlined green. So it's a valid dynamic duo buy setup, and the stock goes up 5 points coming into the first week of November. The good news is about strategy number 4. If you miss that signal, don't worry, it always generates a lot more along the way, okay? Let's look at this setup here, and this is what we mean by consistency. All right, remember, we're not afraid to say that we will have losses. That's okay. I lose all the time, but I'm confident in knowing that most likely my next trade or the one coming up will make up that loss. For example, in ETSY, this was in the last week of October coming into this week in November, we see here that we had 2 buy signals. All right, so you're all excited. This is the way most traders trade. They say, wow, I just became a member of this course. I got 2 buy signals, so I'm going to buy this. So you buy it, and it's confirmed. As you can see, you add the pet D and you go, okay, this is great. I'm going to buy both of these. And then look what happens. If you used one of our generic stop placements, most likely you would have lost 4 points. Now at this point, most traders will say, you know what, I was taken advantage of. This guy Primo is just like all the others. He's just selling me something that doesn't work. And most traders like to go sulk in the corner, and they like to, spend a lot of time telling the other traders in the chat rooms how this stuff doesn't work. It's just, another guy selling something that has no consistency in it. Well, remember, our methods are very consistent, but you can't just stop and sulk in the corner. You have to stay vigilant, because most likely another signal will be generated right away. As you see here, 2 days later, a sell signal was generated, and it was colored red. So that's a valid dynamic duo sell signal. So get back on the horse, and now it's time to go the opposite direction, because you could have recouped your loss of 4 points and potentially made another 8, because 12 points were generated in ETSY. This is a perfect example of what we mean by consistency. Here's an example on Facebook. In the last week in October, a buy signal was generated, even though the stock looked like it was going lower, a couple of bearish engulfing patterns. That's okay. It was confirmed by the pet D. It was outlined green. Remember, the bar before, a lot of students say, well, Steve, the bar before was red. We're not concerned with any of the bars prior to the signal. All of these bars could have been red. That's okay, but as long as the bar above the arrow is outlined or colored green, that is a dynamic duo buy setup. And 12 points coming into the first week in November. How about this sell in WWE, okay? Someone would say, well, Steve, this is going sideways. We're in a range. Every time we come down to this lower range, it goes back up again. So why would I want to sell this? Well, because the pattern has been identified and it's been validated by the pet D. It's been confirmed. This sell signal underneath the red arrow is colored red. So you have the choice to take this. Remember, it's your choice. This is not a system. This is not someone telling you you have to take this. It's your choice. You're in charge. But that would have been a wise decision, because the stock fell 15 points in the next couple of weeks, okay? How about Apple? All right. Here's a really nice, looks like a reversal, but remember, we're not looking at any type of reversals. All we know is that this is above the 50-period moving average, and look where it closed. It closed in the top portion of its range. Now we just want to confirm it, and we apply the pet D, and the pet D is colored this bar green. So you could have taken this on the 31st on Halloween, and a nice quick 12 points to the upside coming into the first or second week of November. How about this example in ABMD? Well, this is another example here. We'll show you how well the pet D helps you confirming and validating setups. Now this is a valid sell setup using strategy number 4 alone. Remember, the first thing you do is identify a strategy number 4 setup. So we are below the 50. We don't have the 50 plotted here, but it wouldn't generate a sell signal unless we were below the 50. And look where we closed. We closed in the bottom portion. So this is a valid sell signal. All the other requirements are met, which I'm sorry, I can't divulge right now, but they've all been met concerning that pattern we teach you in the class. But let's say you're a little gun shy and you're saying to yourself, I want to just confirm this. So you add the pet D, and in order for this to be valid, the pet D needs to color this bar red. All right, so let's add the pet D, and guess what? The pet D is coloring this bar green. Remember, this is a down day, but just because it's a down day doesn't mean the bar has to be red. So what the pet D is telling us is that this is a down day. in a short-term uptrend. So we don't want to go against the trend. If the short-term trend is up, we don't want to be a seller. And that would have been a great idea because we don't take this trade, and look what happens. As my mentors taught me, some of the best trades are the ones you never take. So this is a perfect example of how the pet D can keep you out of trouble by either confirming or not confirming a valid strategy number 4 sell signal. Remember, just because a day is down does not by any means mean that, all right, the bar will be colored red. The same way, if you have an up day, does not mean that the bar will be colored green. This is something that the vendors did when people didn't understand candlesticks some 30, 40 years ago. People had, in the West, had a very difficult time of figuring out how candlesticks work. So what they did was they said, well, you know what we'll do? If a bar is up on the day, we'll color it green, and if a bar is down, we'll color it red. And this was a huge mistake because the actual traders in the East, in Japan and in the Asian countries that use candlesticks, they never did that. What they did was they had open bodies. So an up day was just an outline that was a white background, and a down day was a bar that was completely filled in black. That was the only way you discerned whether it was up or down. You never had a red or green. So a lot of our students get confused when they see a red or green. They say, but Steve, I thought all down days were colored red. No, we're only using the green and red to determine the trend. So a green bar, even though it's down, is just telling you that these are down days in an overall uptrend. Now this is a down day, but it's only one. It's not enough to confirm. So the majority of the bars are green here. So this is telling us we're in an up. Here's a down day in an uptrend. And look what happened. Okay. All right, let's look at AXE. All right, another buy signal has been generated by strategy number 4 alone. So what if we're a little shy to take this? We want to add a little confidence. We apply the pet D, and if the pet D outlines this green, well then we feel confident enough to take the trade. So we add the pet D, and we see that it's outlined green. Now all the others have been green, but that's okay. We're only concerned with this one. So we have the confidence to take this if we want to, and 18 points coming into the first week in November. Okay, someone could say, well, Steve, do you guys factor in earnings or announcements? Because obviously some good news happened. Were you guys watching that? No, we don't require any looking at fundamental news. There's no earnings that are taken into account for the strategies. There's no, who the CEO is or no fundamental news. We don't care about that. Everything is based off the chart in front of you, okay? Because the chart in front of you is what you're trading. I'm not trading the earnings. I'm not trading who the CEO is. I'm not trading what the Fed funds are, or I'm not trading what the what the unemployment report is. You know, that makes no difference to me. Trust me, I traded those things 40 years ago and I couldn't make a dime using them. So I stopped looking at them some 4 decades ago. So if I'm still trading and I don't look at those things, they're not any concern to me, then you may want to say, well, you know, maybe I don't need to look at those things. I'm not here to tell you to stop looking at them. But I'm still trading, and I haven't looked at any earnings. I haven't looked at any news. I really don't concern myself with any of that. And I've been still trading for 43 years now, okay? All right, a couple of sell signals. They're both valid sell signals as generated by strategy number 4 alone. Which one do we take? Well, we apply the pet D. The first one we wouldn't have taken because it's green. Remember, in order to have a valid sell signal, it needs to be colored red. So we're not going to take this trade. That would have gone down for 1 day, and then maybe you would have gotten stopped out. But this one is the one you would have taken because it's a valid sell signal as justified by the pattern, but then it's confirmed by adding the next method, which is the color bar pet D tool. So now you have the confidence to go short Yum Yum Donuts, and the stock falls 16 points coming into November. All right, once again, some news or something happened where it dropped down. We're not concerned by that. But why? Because the market told us weeks in advance it wanted to go lower. So why should we need to know what the earnings or what some news is coming out? We don't care. The market tells us it wants to go lower. Now, we have no idea how low, so we use one of our different exit plans to get out. It's up to us. All right, here's NVRO, okay? Once again, we're kind of in a sideways holding pattern, but a buy signal has been generated. We're above the 50, and we close in the top portion. So 2 of the rules have been met, and the remaining portion of the pattern has been met. But we want to just give ourselves a little bit more confirmation, so we add the pet D. And yes, it's outlined green. So we can take this trade if we decide to do so. If we decide, it's our decision. And nothing really happens in the first week. This is where traders get frustrated. They say to themselves, well, Steve, I've been holding this position for a week now. Nothing has happened. I think I'm going to get out. Just, break even or take a small loss. This is the way a lot of traders trade because emotion comes in. They start to have this self-doubt. Listen, I can understand if you want to get out, that's your choice. But many times we tell our students, trading is like fishing. You place your entry, you get in wherever you decide to get in. You place your exit point and you place your stop placement, and then you just wait. If you're trading correctly, it's very boring. You're just basically waiting most of the time. Okay, it's like fishing. So you're just kind of casting your net and you're waiting for a bite. So a lot of traders would get scared because they don't have the confidence. But after you trade the dynamic duo enough, a lot of students have reported back to us that they feel so confident, they're comfortable enough to wait for a couple of days, maybe even a couple of weeks if they haven't been stopped out. And this would have been a wise decision because once again, it eventually kicked in. And on the 5th day, the stock gapped up and went up 22 points, okay? Now, here's another example, letter W. As we can see, we're going sideways, and we have a valid sell signal. We close in the bottom portion. We're most likely below the 50. We confirm it with the pet D, and yes, even though all the bars prior were green, all we need is this one to be red. When you combine the pattern with the pet D, that's our dynamic duo. Now, is it guaranteed to be a winner? Absolutely not. Nothing is guaranteed. But you have a very high probability for consistency. So we suggest taking this trade, and guess what? 30 points in the next week, coming into the first week of November. How about MPC? All right. Here's an example of how you can get many signals generated if the trend is strong enough. You have a signal, it's confirmed, the stock goes up 15 points, and as you can see, this is a very strong uptrend. All the bars are colored green. So if you missed the first one, don't worry, there were a couple more you could have gotten in and maybe taken advantage of a 7 or 10 point gain. Now, here's another example of what we mean by the pet D being one of the most valuable and powerful tools we have because it can help you in staying out of losing trades. For example, we have in SHAK a buy signal generated here and here. Remember, the buy signals are generated off of the pattern. We're not concerned with the pet D yet. The first thing we do is apply the pattern. And the pattern was right here. And as you can see, this most likely would have been a losing trade. So we're kind of gun shy and we're saying, gosh, should I take the second one? Well, the first thing you want to do if you're a member of our dynamic duo course is apply the pet D. And if you had done that first, look at this is outlined red and so is this one. So you would never have even taken these two trades. Why? Because a buy signal, if the pattern is generated, it needs to be outlined or colored green. And both of these were outlined red. So what's this telling us? It's telling us that the pattern is there, but that the short-term trend is down. And we don't want to fight against the trend. So we shouldn't take these trades because there's a big chance that we'll end up losing. So it's a good decision not to take these because look what happened to the market. Now, if you had the pet D, what you could have done is said, okay, well, it kept me out of those two trades, and I'm going to look for some sell signals. And look at all the sell signals we generated. You could have taken advantage of this in late October for a 30-point gain to the downside. Would have been nice to buy some puts in this, right? Now, AYI, we have a buy signal and a sell signal. All right, the pattern has been generated in both the upside and the downside. Which one should we have taken? Well, this is where the pet D helps us once again. You apply the pet D, and in order to take this buy signal, this would have needed to be outlined green, but it's red, so we're not taking this. In order to be a valid sell signal, the pet D needs to color this red, and it is colored red. And remember, just because it's a down day does not mean it's going to necessarily be colored red. I've shown you other examples of down days that were colored green, but this one is colored red, so it's a valid dynamic duo setup. You can take this one, and in one day, 23 points to the downside. Now, once again, someone could say, well, how did you guys know it was going to go down 23 points? How did you know it was going to gap down like that? Do you follow the news or did you follow that announcement? Remember, the market, not an outside source, not some guy on TV, not some earnings report, not the fundamental news does not tell you what to do. The market tells you most likely what's going to happen. And that's the only thing we're looking at. Now, remember that first example I showed you in UI? Remember the way I shared with you how most traders make their decisions? They'll look at resistance. Well, they'll say, well, Steve, the big institutions, the big banks are selling here. I heard you can never go against those guys. They have all the money and they're never wrong, right? Well, okay, there's resistance right there. There's also lower highs and lower lows. There's also bearish engulfing patterns. So you have a number of methods here that have no levels of consistency that you're following. This is why most traders fail, myself included. I followed all these things. I followed the institutions, I followed the banks, I looked at trends, I looked at candlesticks, and nothing worked in terms of consistency until my mentors taught me to look for this pattern. Because the pattern was generated right here. We're above the 50, and we closed in the very top portion of its range. And then 3 other rules were met in this pattern right here. And on top of that, I apply the pet D, and it confirms it. Okay? If this were colored red, I would not have taken this trade. Now, I personally, a fair, disclosure here, I did not take this trade. But if I were trading this, I would have taken this based off of the pet D and strategy 4, our dynamic duo. And that would have been wise. Unfortunately, I didn't. But for all of our students around the world that did, they potentially generated a 50-point gain in 2 days. Now, some of our students may have gotten out the next day and said, that's a nice profit I'm getting out. It's up to you. Some of our students would have gotten out of the opening on this big gap up. Most likely I would have, or would have sold some shares if I were long. And some of our students are still in this, thinking it's going higher. There is not one wrong or right way to trade. Many of our students will take the same setup and come up with totally different results, and that's okay. In fact, we encourage that because that's telling me that you're making your own decisions. This is not a system where everyone gets in and gets out at the same place. That's robotic trading. That is a recipe for disaster. Why? Because you take yourself out. You have no decision making in the process. I want you to be a part of the process and to make your own decisions. All right, now we've shared with you mainly daily charts. Let's look at a couple of weekly examples, okay? Because I know we have a lot of swing traders. Look at this example in Halliburton. Going back on a weekly chart all the way back to October 2018, someone could say, gosh, I wish I would have known that this was going lower. Well, if you had applied the pet D, look at all the red bars. That could have told you right off the bat. But on top of that, look at all the sell signals you could have taken. Taking these very first sell signals, you could have taken 23 points potentially in profits. Now, there was a sell signal generated here that was not valid because it was colored green. You see, it's a down day, closed in the bottom portion, and it met all the requirements, and it was colored green, so you would not have taken that. The good news is you could have gotten in the very next trade, okay? Here's an example in Netflix, a weekly chart in Netflix going back to April of 2018, all right? Someone could say, well, you know what? This high was not confirmed. The indicators did not confirm it. We're making lower highs, and it looks like we're running out of steam here. I'm going to stay out of this and wait till it gets down to here to buy, and maybe I may short it, okay? Once again, 99% of all traders use these type of justifications. What is the market telling us? Even though it's a weekly chart, we use the same process. We're above the 50, even though it's not plotted, we are above the 50, and we're closing in the top portion of our range. And all of the other remaining requirements of the strategy have been met. So we check our work, click on signal arrows, and yes, it is a valid buy signal. So we're learning how to properly identify this on our own. But in order to get that added level of consistency, we just want to be a little bit more confident. We apply the pet D, so we click on pet D. And yes, not only is that bar green, but all the bars have been green. Do you see how we had 1, 2, 3, 4 down days in a row? Were they colored red? No, they're all colored green. So don't get caught into that trap that the vendors made when they first started selling candlesticks by coloring up days green and down days red. That was just a way in which to help you understand what it meant, because most westernized traders didn't understand candlesticks. But remember, up and down has nothing to do with colors. Green bars tell you that the trend is up and it's filled in, so that means they're down days. So this is an opportunity to go long, not an opportunity to sell. So we see here that on this very first up day, after that series of losses, this is where we want to get in, and the stock goes up 180 or 108 points coming into the next couple of months. So let's recap, okay? What did we talk about today? the two must-have methods. I know a lot of you are probably using different methods based off institutions, candlesticks, some convoluted method that you have no idea what it's based off of, but you bought it for $5,000 and you think, well, this guy says he's always making money, so I guess I must make money too, right? Trust me, I've been there. I know that. If I feel almost embarrassed to tell you how much money I spent 40 years ago on fly-by-night methods, okay? This was 40 years ago. They're most likely based off the same things many of you have spent money on, all right? In order to use must-have methods, we want them based off of consistency. The first one is strategy number 4. It's a pattern recognition strategy, 5 rules altogether. I just shared with you 2 of the rules, okay? That's based off what the chart in front of you is telling you. That's all. We're not concerned with earnings. We're not concerned with what the economic reports are. We don't care about that. We're just concerned with the chart in front of us. This could be a 5-minute chart. It could be a weekly chart. It could be a Bitcoin chart. It could be a commodity chart. It makes absolutely no difference. But strategy number 4 will have some losses from time to time. So is there a way to filter out, not all of them, but some of these losses? Yes, by applying the second method, which is the PET D. This is our second most popular method at Specialist Trading. It is a color bar algorithm that automatically defines the short-term trend. And in this application, it validates whether you should be taking that strategy number 4 signal or not. When you combine these together, we have what we call our dynamic duo. These 2 methods put together are our dynamic duo, and I'm proud to say they are our most consistent package we have at Specialist Trading and my sister site, Pro Trader Strategies. The beauty of this is that you have a way to learn this on your own, because once again, I would love to do it if I could, but I can't be in every one of your home offices trading alongside with you. So we developed our PTS Primo charting platform. I developed this with Pro Trader Strategies so that you can learn on your own to properly identify dynamic duo setups. Remember, our philosophy is you have to be in charge of your own trading. And this is what the PTS Primo charting method does. It helps you become confident and determine how to define your own setups. So ask yourself, do you think these edges that I just shared with you could have helped your trading this past year? Now, if you notice, most of these examples I just shared with you happened within the last month. Okay, I know I've gone to webinars in the past. I've seen presentations where guys have shown you these fantastic setups where they make tons of money, and then you look at the date, and a lot of them are like a year or 2 ago. You know, they're not happening currently. These are happening all the time, as you see, all the time. All these setups are being generated. So we have a great special attendee discount for all of you taking time out of your Saturday morning. I want to introduce to you our Dynamic Duo Special. This is strategy number 4, along with the PET D. We're going to give you a great discount, upwards of 40% discount today. You're going to get instant access to both these methods, okay? You're going to learn all the entries, all the exits, and all the stop placements. I didn't talk about those today. These are all in the course. You'll also get those automatic buy and sell arrows. Along with this, with the PET D, you know, the PET D also generates its own trading techniques. So we'll share with you 4 separate trading techniques that are based off of the PET D alone. But we're not going to stop there. We're going to throw in 12 months of our platform so that you can learn on your own how to properly identify these setups, okay? Now, 12 months of our platform usually costs, just for the platform alone, close to $1,800. We're not going to come anywhere near charging you that. In fact, we're not going to charge you anything at all. We're going to throw in 12 months free of our platform. You're going to get to use the Dynamic Duo free. Now, we're not going to just stop there and say, all you get to use is our Dynamic Duo. There are so many other features that come along on our platform. For example, you're going to get our proprietary exit levels, okay? These are automatic exit levels that are automatically generated with our strategies. For example, let's look at this chart here in EW. This was a dynamic duo setup that was generated. You can see it closed in the top 25%. It's above the 50-period moving average. You can't see it right here, but we wouldn't generate it unless it was. And the PET D colored it green. So if you're learning our signals, you will learn in our course, our online course, where the exit signals are. But one of the best things we did was provide one of these on our platform. All you have to do is click on strategy number 4. The drop-down menu appears and click on range extension exits. This is one of the many exit levels we teach. The beauty of it is that it automatically tells you where these exit levels are, okay? If you want to get most likely a 1-to-1 risk-reward ratio, you would use exit level number 1. If you wanted to get a 2-to-1, 3-to-1, you use these. Now, the beauty is, if this gapped up, you would have exited right here, and you would have made 18 points in 1 week, okay? So that's one of the great things that is also included on the platform, automatic exit levels, just one of our exit features. Another thing we have is over 90 of the most prominent technical indicators, but this is what I'm most proud of. This is the signal scanner, okay? I have a pet peeve about scanners because I've used just about every platform. I won't mention any names, but if you've traded this platform, I've traded it as well. And I just have always had a difficult time trying to have a valid signal scanner to show my signals on. So when I devised the PTS Primo charting platform with Pro Trader Strategies, I talked to the programmers and I said, the scanner has to be as simple as possible and something that takes maybe a couple of minutes a night to use for all of you that aren't able to be in front of your chart all day. So let me show you how simple it is. On the strategy number 4 drop-down menu, instead of clicking on signal arrows or range extension, you click on scanner, and then you see this page appear, strategy number 4 scanner. Click on load symbols. We provide you with upwards of a dozen different symbol lists, different markets, different exchanges, and whatever one you choose automatically appears, okay, in this spreadsheet. Then all you do is click on scan. It automatically knows it's going to scan for strategy number 4 signals. And in probably less than 30 seconds, you have a series of green and red bars. The green bars mean that there's a buy signal in the corresponding stock. The red ones mean there's a sell signal. You can do this every night in less than 2 minutes, okay? Now, let's say you had become a member of this course a couple of weeks ago, all right? You would have scanned, and on the night of October 8th, which was just last week, you would have seen, well, wow, there's a buy signal in ROK, okay? Now, you could have scanned 5 minutes before the close, and it also would have scanned for you during intraday bars. And you would have seen that there's a buy signal now. On the close, maybe you wanted to buy using one of our different entry methods, or maybe you wanted to wait the next day. It's entirely up to you. Maybe you wanted to trade it in the overnight market. But either way, this is a valid buy signal, okay? We close in the top portion. We're above the 50. Now, let's say you're not sure, so you want to apply the PET D. So you click on the PET D tab, and guess what? All the bars have been colored green, including the signal bar. So now you have the confidence to take this trade. So you say to yourself, you know what? I'm going to buy calls tomorrow morning. I feel confident about this, all right? So you would have bought the calls maybe on the 11th, which was, I believe, Monday, and that was just this last Monday. Not a bad trade, because look what happened 2 days later. 30 points in 2 days. This is what I mean by how this is always happening. I mean, I'm not saying they're always winners and they're always making 30 points, but you're always getting setups. This is not something that just happens like, oh, wow, that was a great setup. Oh, by the way, it was 2 years ago. This happened last Monday, where you could have been informed of this. I'm sorry I didn't give this presentation 2 weeks ago, but there's going to be setups generating all the time in the coming future. So this is a great thing, and you could have scanned for this in probably less than 2 minutes. Also, you're going to get Bloomberg TV access and personalized tech support. This all comes with your year use of the platform. So let's break it down. Our dynamic duo combo plus the 12 months, okay? How much is this going to cost? Well, strategy number 4, if we didn't have this special today, would normally cost close to $700 if you purchased it separately. And the PET D, if you purchased it separately, would cost close to $3,000. So we're already talking about $3,700 roughly. That's not even including the PET D. If we included 1 year of the PET D separately, if you didn't take advantage of the great offer I'm going to give you today, we're adding almost another $1,800. So altogether, this would cost you close to $5,500. I by no way am going to even come close to charging you $5,500 for this, okay? We're going to slash this all together. Strategy 4, the PET D, along with 12 months, a full year of the dynamic duo by about 40%, and only charge you $29.95. But we're also going to take it a step further. If we realize that not everyone can come up with $29.95, so we're going to offer you a payment plan. For a small deposit, you can still be up and running with our dynamic duo special along with 12 months of the platform, and you can just make monthly payments, okay? Pro Trader Strategies would be happy to work out a payment plan with you so that all you have to do is come up with a small deposit and you can still be up and running as early as today. So here's how to take advantage of this. Contact Pro Trader Strategies. I would highly suggest that because I realize that not everyone can come up with $29.95. You can call them directly at area code 310-598-6677. They have qualified trading consultants manning the phones right now. They would be more than happy to answer any question you have about setting up a payment plan. There's absolutely no obligation. Just because you call them, does not mean that you have to purchase the product. You know, there's no obligation at all. They would be more than happy to answer your questions. But I would suggest that because you can just put down a small amount and still be up and running. One other thing I did not mention is that once you become a student of mine, you also have online educational correspondence with yours truly. So you'll get my personal email address. You can contact me whenever you'd like. I'll be answering emails over the weekend, this weekend. Anytime you'd like, overnight, and I'll answer them, and you can keep in correspondence with me, okay? And that's not for a limited time. That's for as long as you're trading. So this is another thing that comes included with this, a way to help you learn how to make your own trading decisions. Now, the link you see at the very bottom will take you to the info page and the sign-up page if you want to pay the full price. But I would suggest going to the chat box on the GoToWebinar column. They just posted a live link because that's the live link. The one you see on your screen is not live. You'd have to copy and paste that on there, okay? So just go to the chat box and click on that live link that's been posted there. Now, as I said earlier, if you have any questions, we've reserved the last 10 or 15 minutes. So if you have a question, now's the time to ask. Just go to your question and answer box on the far right and type in any question. I'd be more than happy to answer them for you. And don't worry, if you have a question afterwards, as so many students always tell me, they say, Steve, I forgot to ask, can I call you or can I email anyone? I said, sure, you can always email Pro Trader Strategies, the email there. They'd be happy to answer any question that you may have if you forgot to ask it right now. I see someone's asking, does this work on currency pairs? Yes, it does. I don't know if you missed it. In the beginning, I said I would be focusing mainly on stocks because that's the majority of our students are on stocks. But we have students, especially in Europe, that trade this on currency pairs. A lot of them traded on 5 and 10 minute currency pairs, okay? Remember, ultimately, it's your decision, but wherever there's a market, wherever the requirements are met on this pattern, you will see dynamic dual signals being generated. It could be commodities, could be stocks, could be monthly bars, could be futures. It makes no difference, okay? Someone is asking, Steve, do you trade this with futures? Yes, I do. I trade this with E-mini futures. And because of my time schedule and the time I have to trade, because I'm giving webinars like this during the week and teaching classes, I don't have a lot of time to trade and watch the market. So that's why I like to intraday trade. And I've been using this dynamic dual on intraday trading the E-mini. It works very well, okay? Steve, someone's asking, Steve, how much do I have to put down for that small deposit? Well, that's negotiable. We realize that everyone has different amounts that they're willing to put down or how much they can work with. So that's why I would suggest contacting Pro Trader Strategies. Remember, there's absolutely no obligation. They would be more than happy to answer any question you have. Just give them a call and they'll set up a payment plan with you. And then you can think about it. But the only suggestion I would really strongly make is don't think about this too long because next week we'll probably have an entirely different promotion and this will have gone to the wayside and most likely it'll be close to $5,500 again, okay? So feel free to watch this video when we send it out to you later today, but don't sit on it for a couple of weeks because that $29.95 will most likely go to the wayside, okay? All right, so I guess there are no more questions. As we come to the end of the presentation and we take one last look at our disclaimer, I just want to say thank you so much today. I hope you learned something. I hope you got a little bit more insight into what we do and how we really want to educate you. But most importantly, I look forward to all of you becoming students of mine in the Dynamic Duo course. Thank you so much for attending. Have a great weekend, and I'll see you next time. Bye-bye.